Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello, Ganja friends, checking in on the Canadian MJ sector, WEED, APH, ACB, EMC, MJ, NIMH, HMMJ. It was a good week for the sector, a good follow-through week. We had WEED here. We're still in a consolidation pattern, but it is a healthy consolidation pattern favoring the bulls. We have the high of the bull run, our low of the pullback of 1022, our lower high at 1083, a little double top, and now the bulls are trying to form a higher low. This is very healthy consolidation. If you look at just the last 6 days, this is a potential bull flag where you have a 4-day bull move, very healthy short-term consolidation, holding exponential support, close up near the high of the day, and a break of 1083 will confirm it. And then we'll be looking for a move up towards $11. So the Canadian MJ sector is getting that look in its eye where we're seeing some big moves. If you're watching APH trade on Friday, certainly a lot of fun there. And why that is occurring is the lack of resistance where we are currently standing. So for WEED, we have a lot more resistance in this range, but I'll show you what I'm talking about with APH in just a moment. So I'm looking up at 11, 1114, 1125, 1185, 1248, 1288, 1330. We can pick out a bunch of resistance over on WEED. And once we break 1330, that's when the fun begins because there is a very significant lack of resistance. Essentially, it's not blue sky breakout, but it's going to be the same effect due to the fact that it was just one day, that crazy day where we ran from, $9 up to $17. So the bulls are still in full control. They have a lot more work to do in terms of breaking through resistances. We have clear supports on the way up, and we're just looking for a break of 1089 to see this continuation. For APH, very significant bull move on Friday with the volume, and you can see it's now taking the lead in terms of strength on the daily. The break of 693 was the signal for higher highs. We got over $7. 715 was the next resistance. We ended up pulling back from 723. And are rejecting from the upper Bollinger Band. But if you were watching APH trade, it was skipping 10-cent moves very easily, and that's due to the lack of resistance. And we need to be watching APH earnings coming up. That's why we may be seeing a little bit of an influx into APH as opposed to WEED, and I don't have the exact date for APH earnings off the top of my head. If anybody else does, feel free to comment. But look at APH here with the weekly time frame breaking out, and here's what I'm talking about, the lack of resistance. After 715, we're now just looking at the all-time high week, where we're looking at up at 877 as the all-time high. So just really psychological resistance levels up into that point. I could pick out 779 from back here, 797, $8 psychological, and then 877. So again, the lack of resistance makes a little bit of bull volume go a long way, and APH is much closer to an all-time high breakout than WEED is, and I do believe we're going to see this in APH potentially before the end of the year, the way things are going, and just need to keep up this weekly slow and steady higher low, higher high pattern, and we consolidated for a significant amount of time, bulls showing back up, and a really good trading day. And Friday was the kind of day where you could get into APH and make some significant moves. And if you missed that move, you could get into WEED as a bit of a laggard. And at that point, we had an opportunity on WEED in the 1060s, the mid-1060s, once we saw APH was breaking out over $7. And now we're looking to see if WEED can follow along early next week by breaking 1083. Checking in on ACB, not nearly as significant for the bulls. Higher lows and higher highs. And if you've been watching these videos for the last 6 months, this is pretty much in line with what the charts have been saying in terms of who is strongest. APH has had the strongest chart, technically speaking, for a long time. WEED has been second, and ACB has always been the laggard of the big three, let's call them, and has always really not been attractive compared to the other two. And we're seeing that again on these charts. Sure, it's a bullish uptrend, but it's not the same kind of strength that we're seeing in these other names. So the clear higher lows support is 255, 269.5, and then another higher low just recently at 275. The bulls have to break 280, and then we're looking up at 289. But the weekly chart, even though we do have this higher low and higher high in place now, we are also entering an area of a lack of resistance, but we're just not seeing the same kind of bullish follow through. And that is due to the upper Bollinger Band resistance here and just not the kind of significant bull volume and significant follow through that we're seeing in these other names. Another reason for that might be the share structure. A lot more shares in ACB, which is why the price is down in the $2 range. It's more of a micro cap here. Perhaps hedge funds are not really looking to play a $2 stock with a ton of shares compared to a $10 stock with less shares. These are all just hypothetical potential reasons that we're seeing APH lag behind. And obviously, the fundamental reasons, the financials, all those things like that. But the bulls are in an uptrend. They're certainly not complaining, but they're looking over at APH on Friday and saying, man, where's our bull move? So we'll have to keep an eye on it. But as of right now, still sticking with APH and WEED as the best positions in terms of technicals. So looking at EMC on the daily time frame, we're consolidating. And the bulls are looking to form a higher low of support. 177 is trying to hold right now. If we break 177, we're looking at 173. This daily chart's not really important to me, and not having a position. If I had a position, I would be looking at these little details. But for people scouting a position, look at the weekly chart. We have been rejecting from this middle Bollinger Band multiple times now, the last 2 weeks, the last bull move at the end of July. And again, it's this pattern of a descending triangle, essentially, with our 200-week support and our declining lower high tighter range. So we can see we bounced off the 200-week, we hit 211, we came back, we bounced and hit 190, we hit the 200 period, and now we hit 188. So we're getting very tight, and there is going to be a break here in the near-term future. I would say sometime within the next month, and we will be looking for a bear break. If we see a move below 156, we're going to likely see new all-time lows. If we see a bull break over 190, that's a signal to enter a longer-term position in this high-risk, high-reward name to be looking for the first uptrend since inception here. And we've been in a downtrend since the first 4 days of the IPO, or the first month, I should say, of the initial offering. And now we are looking to change the bearish momentum back to bullish, but still have a little bit of work to do. Have a couple resistance levels left. MJN, higher low at 246. Bulls are looking to break 267 and 272 to see continuation and a higher high. The weekly time frame is at the upper Bollinger Band resistance. If we can see a move over 272, the next resistance to be looking at is 287, 297, 314, and then 354 is up towards the all-time high. So another low cap name in the $2 range. And, these stocks, there's plus and benefits or plus and minuses here, where these low cap stocks with higher share structures and lower price ranges, the general public might say, oh, if this stock goes to $10, I can make 500%. Not really realizing that, it is the share structure that is the reason for the stock price to be this low comparatively. But that mindset is attractive to some people. But on the flip side, like I said, to hedge funds and to bigger money, they're going to be looking at the more stabilized and more significant priced tickers. And there's probably, I don't know the Canadian rules, but I'm assuming that there are some rules with certain hedge funds where they can't have holdings of positions that are below a certain dollar level in terms of their price, just because that would be too high risk. So if you know that answer, feel free to chime in as well. IMH on the daily time frame was in a clear pullback. We had a weak breakout, and it was just long, drawn-out consolidation for 2 months. We are trying to break that by forming higher lows and higher highs. As of this point, support is 116 and resistance is 126. So another low cap, high risk, high reward name. In terms of the weekly chart, we have an equilibrium pattern forming. We pulled back and hit our low, high of the bounce, higher low is at 103, and we will likely form a lower high compared to 147 and continue to see this range tighten. And we will be looking for a break in this tightening range to indicate a clear direction, but this could play out for another 2-3 months. This is definitely something to be watching as longer-term equilibrium patterns, and I'm just going to bring one up here. This is not an MJ stock, but this is Baidu, and we were watching this Baidu pattern on this weekly chart for years, this equilibrium pattern, and once it finally broke, it was such a clear signal. But here's our low, high of the bounce, higher low, lower high, higher low, lower high, higher low, lower high, higher low, higher high. Right here is the bull signal, and look where we are now. So we are up about 25+% from where we got that signal. And my point is, on a very long, drawn-out equilibrium pattern on the weekly time frame, it's a great swing trade, longer-term signal when that pattern does break. And for IMH, we are looking at that pattern beginning to form. It's obviously nowhere near as drawn out, and trying to get it back up here for us and doing a terrible job of that. So we still have a long way to go until this breaks, but it is something to be keeping an eye on. And if you are a trader and you have some longer positions in other names, maybe keeping or freeing up some capital when it does get tight to the point where we know a break is coming in the near-term future. And that's where we can benefit as traders in this space by capitalizing on breaks on these names, these lower cap names like IMH and like EMC. When EMC breaks this weekly pattern, there's going to be some nice short-term, multiple-week bullish action to follow it. And so that would be a scenario where I would, it's not a bad idea to have a long-term position that you're looking to hold and then some free trading capital that you're able to be agile with and move around. And, you jump in on APH on Friday. Maybe you sell before the end of the day Friday to lock in those gains and then have that cash ready for the next trade, the next short-term opportunity for names that you're not looking to invest in and hold long-term, but names that are giving beneficial setups and clear breaks of these patterns. So last we got HMMJ, a little bit of red here, and definitely need to be paying attention to the individual companies in the holdings here. GWPH, the pharmaceutical company from the U.S., is a 9% holding in HMMJ, and they had pretty bearish news just on Friday where their competitor came out with much better trial results than their product for seizures. And in result, we saw GWPH drop 10% and the competitor rocket up, but that hurt HMMJ. And biotech names are inherently very risky, high risk, high reward. So that is definitely a factor. Where we stand right now, resistance is 966, and we topped out at 957. Bulls must hold 924 and keep higher lows and try and break that resistance. The weekly time frame for HMMJ is not clearly setting a higher low, higher high pattern yet. We have our low, high of the bounce, higher low, lower high. So this is an equilibrium pattern right now, and if we do pull back from here, we will stay in this tightening pattern for the foreseeable future, as there is a lot of range that we could pull back between 837 support and 957 resistance. So watching these weekly tightening patterns on EMC, IMH, and HMMJ, and as for the other names, they are very clearly and already bull breakout patterns on the weekly above the upper Bollinger Band. So the space is getting exciting again. It's looking like it's shaping up to be a good fall, good end of the year, good 2018, good next decade, and looking forward to watching the space develop from here. So I appreciate you watching, and we will see you next week.